All right, just give me a moment and we'll get started, guys. Oh, yeah. Background change. Yes, yes. I thought let's go back to some virtual backgrounds. Just let me know if you're able to hear me okay and the screen is all fine. All right, that sounds good. So, right, internet connection so far, so okay. Yeah, if Comcast misbehave and the connection goes wonky, I'll turn off the video, right? More important is the content than my face. So, but let's see how it goes. So welcome. Uh, Maybe let's give a few minutes for others to join, and happy to talk about stocks investing as always. Saturday morning, that's the routine I want to follow, and so far so good. Today, I do want to talk about something around Apple. I read a good article. I forgot where did I read it, but little more details into what Apple might be focusing on. And of course, we're gonna talk about. I love James Bond movies, so I want to talk about Bonds. Uh, Steve says back to FOMO. Yeah, yeah. If you look at the markets, especially the tech stocks are up 11%, right? Nasdaq is up 11% in 3 weeks. This is the amount of return that stocks are generally supposed to give over a period of a year, and we are just 3 weeks into 2023, and Nasdaq is up 11%. It is FOMO, uh, or it could be that everyone was so negative. So we will talk about it. We'll start on the macro and see, is it soft landing? Is it like sometimes also you have that inflation fatigue? Okay, I'm done with it. It's okay, inflation will come in. I'm gonna go back in market. How long can I sit outside? Yeah. So I don't know what's driving it. No one knows. Everyone have their own guesses. But we'll see. I'm not complaining. Basically, I'm not complaining. So I'll take what market is giving, right? No complaints. Okay, for those who are new here, for now, I have disabled the participants from sharing screen or starting video or unmuting themselves. Not that I don't want to talk to you. We had a couple of instances with Zoom bombing, so I'm just being cautious. So if you want to talk about anything, just raise your hand and I'll unmute you. Right? Becomes better. Typing could be take longer, and if you don't want to type in, no problem. Just raise your hand and I'll unmute. Okay. See another comment, Ramesh. China opening and tax harvesting has a lot of money on the sidelines and is back in the market. FOMO kicks in. Numbers that I read was around $2 trillion sitting in the VC fund and overall $4 trillion sitting in the money market funds, which could be waiting to be deployed. Right? And I mean, there's a lot of money that has gone into bonds, treasuries this year, last year, because of the high interest rate. And I guess even that money is waiting to be deployed. So, but is it the right time? Who knows? From my perspective, I think every time is the right time to deploy, to be in the market. Just that you need to position size and you need to match your investment horizon with your need horizon, right? The time horizon needs to match. The biggest mistake that as investors, we do is to try to sponsor our short-term needs with long-term investments, and that's where we get beaten. As long as from investing perspective, if you're investing in the stock market, it is for your long-term goals. Make sure you don't tie your short-term needs with to be fulfilled by stock market. I need to buy a new Porsche, new car, new Tesla, and I need to get 50K. Don't depend on the market, right? do something else, hold it in cash or whichever way, right? Markets could go either way in the short term. But yeah, for sponsoring retirement, sure. My kid who's 2 years want to save something for college, sure, that's what market is for. Anyway, I bond is locked. I didn't know that I bonds get actually locked. Sure, not sure what do you mean by I bond is locked. Oh, today is 28th. Yes. So the interest rate, today may be the last day to get the interest rates of 9.6%. I mean, I invested in I-bonds only once. So I've stopped following on what's the new date for I-bonds. Where did I-bond go? Okay. No, you have April 30th. So I'm not sure what you mean by bond is locked. I mean, you can still get 6.89% until April. After April, it will reset for the next 6 months interest rate. ARKK is up 37%. Why not? Why not? ARKK is one of the biggest holding. Tesla is up, what, 50%? ARKK. ARKK. I mean, a lot of these so-called growth stocks, risk on assets, which include some of these growth stocks, which also includes some of the crypto stuff, all is up. Right? Crypto is now, Bitcoin is above 23K. This thing was teetering around 15K not so long ago, right? If you go back and look at, let's say, last 90 days, where was it around 50K, 15K? See, in November, it was around 15K. So not even 3 months ago, now it's almost 23K. If you start of the week, like 16, so start of this year from 16 to 23. That's almost 50%. So okay, people are tired of, again, it's not an advice, but it looks like folks are, okay, I'm going to go back in. Right? So Bitcoin is up, risk assets are up, ARKK is up. Look at another one. And we'll talk about this. I think BZFD. Look at this. It's up like 400% from $1 in last 2 days. Again, I don't deal in these things. The only reason I brought this up is for something different. A lot of stuff that I'm seeing in AI. That's the reason I brought this up. I generally don't deal in these micro caps. But this damn stuff is up like one point of a time, it was up 400%. From $1 to almost $4, more than $4. So a lot of risk coming back in the market. And on the hopes that Fed will pivot, no more rate hikes, and all things gonna be good. And if that happens, no more rate hikes, we don't get into recession, and it's only gonna be soft landing, soft recession, and not a severe recession. Probably it's the only time since 1900s, maybe except World War II, that we had these conditions with Fed increasing in interest rates, with inflation being high, that economy did enter into recession. It's going to be the first time. But there is always, things happen for the first time. But who knows? See another comment. Lucid shares were paused for 14 times in a day. Lucid, there was a news that Saudi sovereign wealth fund, they were looking to buy stake in Lucid. That's what I'm aware of. And maybe that caused a FOMO among Lucid investors. Yeah, 43% up. Yeah, it would have hit all the circuit breakers to pause the trading on it. That reminds me, when I talk about pausing trading, NYSE just forgot to do something at opening. Was it Tuesday? Was it? I see a comment from Andrew. Is this meeting about highly speculative stocks? Absolutely not. Today we just brought up this saying the market is becoming FOMO. I generally don't talk about any micro caps. I generally focus on either the medium or the large caps. I generally mostly focus on fundamentals and options. So, but I'm open to answering questions if people have. So, someone talk about Lucid. I know what happened to Lucid. I don't try to chase these things. Sorry, what I was talking about. Lost my chain of thoughts. Yes, NYSE. So NYSE forgot to open up nicely. Was it Tuesday, Monday? There's a nice detailed article around how these exchanges operate. I think it's a great read. I haven't finished that, but maybe next week I will talk about what had happened on NYSE. As an investor, sometimes these things help for us to know how the heck these exchanges operate, right? How the trades happen on these exchanges, right? When you are buying or you are selling, who's on the other side, right? And one of the portion on the other things that happen on NYSE is daily auctions, and they not forgot to do that. There is a technical reason behind it, but let me finish that reading, and maybe next week I'll talk about what the heck had happened with NYSE when they started on Tuesday, because they had to halt almost 300 shares from trading, right? They had to stop the trading for almost 300 shares. And there were wild swings in the prices. And now I think they had to go back and cancel a lot of stuff. All right, okay. Cool. All right, so let's talk about, jump onto our regular sessions. People will join when they'll join. So welcome everyone to discussion number 159. Wow. We'll be nearing 200, hopefully 200 this year, which is what, our third year is when I started. Maybe I think I started mid of 2020. So let's see how long we can do. I plan to continue it as long as I can physically and mentally be active and be in the markets. So just that we need you to show up and share your learnings with the group. All right, so let's maybe we can skip macro for now. Maybe let's start with other stuff, then we can come back to, or let's continue on or with the macro first. All right, so as always, we start with looking at what happened on the market overall, a little bit on the macro. I am not a big macro investor as such. When we talk about macro investors, for them, the Coke is no different than Pepsi, no different than Schweppes. For me, those two are different ones. But we have seen that macro does impact the overall scenario in which companies operate. So it is good to understand what's happening on the macro side, especially last few years. I think macro factors are driving a lot of changes in the market. Markets are not independent as we would have thought. United States as the most, I would say, this is the biggest capital market in the world, and it's slowly, it's surprising to see that it is not an independent market. Fed has a big role to play, and that's why I do want to look at a little bit macro to start the session to see what happened at the macro level this week. So we saw stocks going back on the green side, and hopefully the signal was maybe we will not have a recession. Maybe we will just have a soft landing, not a recession, but no hard landing, maybe just a soft landing. Looking at and it won't be as bad as what we have been thinking about earlier. So we see a lot of consumer discretionary stocks, which includes like stuff like Teslas and any, the stock which are generally have a growthy side to it, they'll do good if we have a risk on, and those were especially strong. Value-oriented stocks, defensive stocks, they didn't do as good as the rest of the ones, right? So right now, market is pricing in 25 basis points hike. Not that Fed is not gonna stop hiking. Fed is not gonna pivot, means not gonna reduce the rates. They will still hike the rates, and market is now pricing in 25 basis points. The previous hikes, we had 75 basis points. I don't know, what was the latest one? Was that 75 or 25? I forgot. We talked about it, Fed hikes 2022. The latest one was 25 or 50 or 50 basis points in December. They have been doing 75. I think on December they did 50 basis points. Is that right? Hold on, I'm just checking what they do in December. Oh, I think December was 50. And now market is already pricing in that probably they'll do only 25 basis points. We don't know. This is what the market participants are assuming, thinking, and that 25 basis points should be, again, it will increase, but at a lower rate. We'll get to know on February 1st. February 1st is when the market, FOMC will conclude their 2-day meeting. I don't know what they do in their 2-day meeting. I still wonder, because every time it's market is already predicting, kind of giving guidance on what the rate is, and Fed will come back with the same rates. So I don't know what the heck they are doing in the 2-day meeting. Fed has always a lagging data. So the inflation numbers, housing numbers, any numbers that they look at is always a few months old data. So I don't know, maybe just having some wine and dine for 2 days. I have no idea. But anyway, there is a 2-day meeting that will conclude on February 1st. Then we will hear from Jerome Powell on what the Fed would be doing. So if you are trading on day-to-day basis, Feb 1 could be volatile. Market could swing either way because of what Jerome Powell may have to say. Sometimes even if Fed comes back under 25 basis points, but depending on the specific words that Jerome Powell may choose, sometimes it's just based on his, I would say, his body language. Market may predict the future in a very different way. So mark your calendar for Feb 1st. You might see some more volatility in the market depending on what Fed comes back with. Over the rally that we are seeing in 3 weeks, so sometimes I feel that it probably buy the rumor and sell the news. If Fed comes with the 25, maybe we'll not say anything. Again, I have no idea. We don't know. I don't think anyone has can say what market will react after the Fed announcement. But seeing the markets, what they have done in 3 weeks, it's already, I think, in anticipation. And Steve said Fed is also reducing its balance sheet. That is right, but I'm not sure it has gone on too much. Let's pull up a Fed balance sheet. We are seeing it trending in the right direction, though, trending in the lower direction from the height of almost $9 trillion in April. Now it's 8.4. So we're down $1 trillion, not even, it's like a $500 billion less. Right? A Fed problem is not renewing the bonds after the maturity. But we have a lot to catch up. Right? This is where we were before COVID. It's like around 4 trillion. We went all the way to 9 trillion. And a lot more to catch up. But yeah, this is also, good signal. We'll see based on what happened in Japan. Who knows, right? Japan had already kind of pivoted. The central bank started to buy government bonds, and I always worry about Japan. Those guys, I don't know what the heck they are doing, but not sure. I'm concerned on what time will Japanese market will implode. It's just been running on the Fed, the Japanese Fed buying its own government bonds. But we'll see. So the last thing is around inflation. We also saw inflation numbers came out in December. Nothing specific, not a big change. It was the PCE, the core inflation was up 4.4%, which was expected, still way higher than Fed expectation was 2%. But it was well below the 5.4% peak that happened in Feb 2022. So again, inflation is still there. It's not that the food price is going to come down. Egg prices are up 60%. I mean, of course, not just inflation. There's another reason for why the egg prices are so high. But otherwise, regular meat prices, food prices, they're still way higher than they were. And in some cases, you're not even able to find some of the stuff in grocery store. Those of my friends who are from India and use that, looking for Indian flour for making Indian bread called roti chapati, it's not even available. Thank God that I had some stock available, so we are still okay for 2 months, but it's gone. You can't find it in Costco. You can't find it in any Indian stores. Thanks to the war between Ukraine and Russia and India not exporting its wheat or reducing the export of its wheat, that wheat flour is gone. I don't know if anyone else in the Bay Area is able to find it. Please DM me. We are looking for some Indian flour. I'll run out of stock in a month. But it's not nowhere to be found. All right, coming back to our inflation. Naresh went to Canada to buy flour. That's a deal, right? We'll have to figure out. We may have to drive a few hundred miles to buy it. Otherwise, I'll do with rice. All right. So inflation, again, numbers were as expected, and I think right now the market has moved towards from better than expected to it's been less worse than feared, right? That we also saw in earnings. Earnings were not spectacular. We had some disappointing earnings. Look at Microsoft. We will talk about Microsoft, but a quick highlight on the Microsoft is like it's a 2% revenue growth, right? Just 2% overall revenue growth. So from a earnings perspective, these companies are feeling the impact, but the markets are still went up. IBM, Intel, same thing. But look at how the indices have performed. Dow Jones up almost 2.5%. Dow was one of the best performing indices for, I would say, for October, maybe November, December. Now the others are catching up. S&P overall is up 6%. On an average, S&P returns what? Excuse me, 8 to 10% in a year. It's already up 6% in 3 weeks. More or less, NASDAQ, the tech sector, the growth sector, which was beaten badly in 2022, it was down 30%, 31% in 2022, is up 11% in 3 weeks. So, I don't know, has market declared that it had bottomed out? It's all time to go in. Who knows? But right now, all reminds me of what we saw in Jan 2022. Sector-wise, consumer discretionary, information technology, communication services. These were the three mains for the last week, right? 6.7, almost 6.5% discretionary. IT is a 4%. And then the so-called little safe sector, money rotated from there to other sectors. So we have seen markets have already gone crazy this few weeks. So are we waiting for the dip to buy? I know some investors, some of my friends, some other meetup I attend, people talk about they've been waiting for now 2 months, ever since the October down. They've been waiting for the correction to buy into the market. I don't subscribe to that theory. I continuously stay active in market. I think it's always the best time to buy, to invest in the market was yesterday. The second best time is today. So last week I read a book called not Waiting for the Dip to Buy, but the book called Just Keep Buying from Nick Maggiulli. I don't know, maybe hopefully this is the right pronunciation. It was an interesting read to know, especially in an environment like this, where as an investor, we always are in double mind of, should I buy now? Should I wait? Should I buy now? Should I wait? Is market going to go low? What if I buy now and the markets tank, right? One thing is very clear. Market is never going to come and ring a big gong saying, hey, I have bottomed out, please buy. That's never going to happen. Rather than listening to YouTubers or other individual investors who would ask us to wait for the right time to buy, wait for the signal, I would rather listen to the investors who have shown their worth in the markets. I would rather listen to the likes of Warren Buffett, Howard Marks, Bernstein, Dave Rubin. Look at all the big investors, Manish Pabrai. Right? No one knows when the market will bottom out. Right? So why wait? But I also found a good study in this book, which talks about, should you wait to buy the dip or do dollar cost averaging and stay in the market? So a little bit of a case study. Imagine you were dropped somewhere in the history between 1920 and 1980, and you have to invest in the market for next 40 years. You invest $100 every month for 40 years. That's the pretty standard dollar cost averaging. I don't care where the market goes. I am setting aside one particular amount to be invested on a regular interval in the market. Right? Now, most of us do with our 401k. So that's one strategy. Other strategy, which is where we try to time the market. We think that we know where the market will go. It gives us an idea that I'm in control and our ego feels good. But the reality is we are not in control. Nobody is in. But again, let's look at which says you will save 100 every month and only buy when the market is in dip. Right? And this has been a perfect conundrum most of the investors have been in is, oh gosh, 2022 market was going down. I think it'll go down further. I'll wait. I think it'll go down further. I'll wait. Right? And then it started to go up, and we get into the price anchoring bias, and then say, I didn't buy it S&P at 390, so 405, you just can't buy it. You'll wait for the dip to come. So that's a buy the dip strategy. A dip is defined anytime when the market is at not all-time high. But for the comparison perspective, the author made this even better. Not only you will buy the dip, the author will make you a god about when you'll buy. You'll know when the market is at absolute bottom between two all-time highs. Right? Now you're God. Market was 480, somewhere 470, 480, or some in early 2022. And it hasn't yet got up to 480, right? Let's say it gets to 480. You know that it bottomed at whatever, 360, 370, because you're a God. And you'll put all your money at that bottom. What can be a better position than that? This will ensure that when you buy, it will always the lowest possible price. So let's compare these two strategies. How did they work out? Which one you choose? Dollar cost or buy the dip? Like logically, I'm like, dude, if I can find out exactly when the market is bottomed between the two highs, I would always buy it there, right? Then I am picking up those stocks at the lowest possible prices, right? But actually, if you look at 70% of the time, this buy the dip has underperformed your dollar cost averaging. And this is despite the fact you know exactly when the market actually will hit a bottom. But 70% of the time, it is underperformed. So that's why I don't subscribe to waiting for the dip, because we don't know when the dip will come. The other thing is generally look at the history of the markets. They go up for longer duration, then they go down. Those downward movements are faster, but they stay for a very small time. Only time when it outperform is when the dip happens very close to when you put in a lot of money, when you invested in. Otherwise, most of the time, the DCA will outperform. So this is another one of 1980s to 2010. This the dark black suggests the buy the dip. Gray is DCA. The dots suggest you buy only when the there is a dip between two highs. But still, overall the DCA performs. So I'm not waiting for someone to tell me that now the bottom is in. That also doesn't mean that I'm gonna go all in and put every cash on let's say 5% drop in the market, because again we don't know if the market has gone up 11%, tomorrow it goes down 5%. Will it stop at 5%? Who knows? So I still continue to stay in the market, keep buying it, and make very logical choices around if I want to sell or not. Right. Dave, I'll come to your question. So this week, long position, I bought a few more, Intel, Microsoft, XLE, ASML, and strategically sold a little bit of position in Meli, which is Mercado Libre. The stock is up 50% in 3 weeks on no apparent change in business, right? There is no new business news coming from Mercado Libre. Yeah, it is due to report earnings next week or a week after that. But the only news that we found around the Mercado Libre was that it's one of our competitors was accused of accounting fraud. So that competitor probably going to fold up, and that's a good thing, but I'm not sure if it is a 50% good thing. So this position became too big. It became the biggest single holding in my portfolio. So trimmed a little bit, might trim maybe a little bit more on Monday. We'll see. But again, it's just more. I still love the company. I will still hold it. I think even after that trim, it probably still is the biggest position in my portfolio. I mean, look at it. It went from almost 820 to 1220. If the earnings are great, I'll be very happy shareholder of it. So not that I don't like this company, that's why I sold off. Reason I share these is because we talk about companies. So I want to be very open in terms of what I am doing. Okay, a couple of questions. US dollar down, tech up, crude oil down. What do you think about long-term energy here. If so, when you're looking at Dave, long term means if you're looking for 20 years, 30 years, I think fossil fuel, I'm pessimist about fossil fuel energy for next, let's say 30 years. What are you looking for next 5 years? I am optimistic about fossil fuel companies. The reason is, for us to even get to, we will eventually move to renewables, but we need a stopgap arrangement, and still need to have our fossil fuel companies fill the gap while we move towards the renewables. Dave says, okay, my long term is 6 to 12 months. I don't even look at 6 to 12 months. So I'm not sure what the energy is going to do. Looking at what was a Chevron reported the best quarterly profits ever, and they're gonna reinvest, not reinvest, they're gonna return $75 billion to shareholders in terms of buybacks, right? 6 to 12 months difficult for me. I don't know what could happen in 6 to 12 months. So right now the energy, crude oil is down. Yesterday I saw on the gas, the damn gas was more expensive. I thought the crude oil should have been up because SPR is being filled up again. Crude oil was down a few weeks ago because we were releasing a lot more from SPR, but I didn't check on the recent one. Let's see, let me bring up. Yeah, I mean, since start of Jan, crude oil is a little up. Yeah, overall it has come down because we also released a lot from SPR. Number two is China didn't reopen. Now China started to reopen, so I do suspect that there will be more demand for energy because China has given, they're done with their zero COVID policy. They're going to reopen the economy. If that's the case, there will be more demand for energy. That should bode well for energy companies, right? So that's one, not just for energy, but also for some of those materials company, right? So that bode well for energy. Could be that's like 6 to 12 months. That's the biggest factor that I'll be watching for. The other one around the natural gas, that didn't even pan out, right? There were a lot of doomsday scenarios that were being predicted for natural gas. But the fact that Europe is having its warm winter, natural gas is even like it's 52 weeks low. It just hit its 52 weeks low. We couldn't have imagined this a few months ago. And this is where hopefully with this, maybe Russia will be compelled to, this probably will also hurt Russia, because the whole idea was Europe will have to buy these natural gas from Russia to brave the winter, but looks like the winter wasn't really didn't pan out to be that cold, and hopefully they won't have to buy all that natural gas from Russia. So my play on the oil is, I mean, I've been holding some of the ETF for income as well as oil appreciation, and I don't have any individual stocks. I only have XLE and AMLP, and I do want to build positions on XLE, because next 5-6 years, I think we still had a lot of underinvestment in oil sector, that unless, until we reached out to the full renewable side, we'll still have a need for these fossil fuels. All right, if you look at ES futures yearly, quarter looks like we are going up. Yeah, up after the beating that we got in 2022, it's but natural to think that we will go up. I think the biggest challenge that investors are facing is we will go up, but everyone is saying that we will basically go down before we go up, right? And now when that down will come, nobody knows. And I don't even know. Is it going to be straight up? Is it going to be V-shaped down and go up? Is it going to be K-shape? There are a lot of different shapes, and I don't really bother about that. Comment from Dave. While you're selling Melly or long-term holding? So, okay, let me clarify this. I'm not getting out of Melly. I've sold a very minuscule portion of Melly. I always keep some option trades open on Melly to continuously reduce the reduce the cost basis. So my call spread is way in the money, which is great. I lose money on that call spread, but that means, my rest of the portfolio has gone, the Melly positions have gone up 50%. So I just sold a little bit of it because I don't know why it has gone up 50%, but sold a little bit to compensate for that call spread. But still, even after that sell, I think it is today, even today also, it is the single biggest individual stock position in my portfolio. So it actually became bigger than Apple. Of course, SPY is the biggest one. I think the second, we'll talk about, I'll share my top 10 as I always do. The first session after the end of a month. So next week is end of month. So yeah, on 4th, I'll bring up that portfolio pizza. So you'll know what my biggest positions, top 10 positions are. Dave said, I have ES futures, 4,400 call, 4,350 right now. It's down 170%, but I'm not worried. I'm still bearish. I have a short call, which I've been rolling on QQQ as my hedging rate. I have a 270 short call, which I'll just now roll to 17th Feb. I have 275 short call. I have 280 short call. And no, I think, yeah, these three. And over, I think 6 or 7 contracts. I'm still, overall, the portfolio is up like 15-20% maybe, right? But I still think it's too much too soon for me, so I'm still continue to hold my hedges. But yeah, I'll be happy. I mean, these are the times when I love losing money on the option side, right? Hey, it's okay to lose money on those hedges. It means the rest of the portfolio is doing great. But I'm still holding those short calls. I think I have a call spread on SPX, 4,050. That is now in the money. I have a call spread on RUT. Well, that's fine. Those are the hedges. Worked great in 2022. And those hedges are not working right now, but I ain't complaining, man. Even after those hedges, if your portfolio is what it is right now, I have zero complaints on that. Yeah. So these are the times when your hedges don't work, when the markets just go one way. But as a prudent investor, I think for me it has worked well to always keep hedges to reduce the volatility in portfolio. Okay, fear and greed index. We are way into the greed side. Even last week also we were on the greed side. We'll see what happens in the next few weeks. So what's up for the next week? It's a big tech week. A lot of big tech companies are reporting earnings. The notable are, of course, the Metas. Meta is, we still call Meta in the big tech, but right now it's like $300 billion. It's no longer that big. But I think psychologically, we still think, part of a FANG. So it still count from an emotion perspective. Amazon, Apple, Alphabet, Thursday going to be fun day for those. Again, these companies are, also constitute or have a big weightage on S&P 500. So even if you are not tech investor, somehow you will be impacted by what happens in these companies. Right? So it's going to be a busy week. A lot of companies that I hold in my portfolio are announcing, right? GM, What else? To Snap, of course, these things don't hurt. Peloton, Meta, Amazon, Apple, Alphabet, Ford, yeah, Atlassian. Ramesh, I'm getting tired of rolling melee call spread with one. There's now testing short put to catch up. Melee is not a good instrument from a managing perspective. It's like you do a trade and then bear the consequences, right? If you had a full covered call, maybe you can roll out or roll up your a short call. I don't keep a naked call on melee. I only have a call spread, and the bid and the ask spread are so wide in melee, and again, it's not a good instrument for trading options. The only reason why I still do is because it's now become my biggest individual stock position. So I want to reduce the cost basis, and it had worked out great in 2021, 2022. So it's okay. 2023 first trade doesn't work out, that's fine. But the portfolio is, the overall melee holdings big. Yeah, it's a pathetic stock when it comes to the management on the spread. I can't even get a credit to roll the spread out because the bid-ask spread is so wide that just rolling one side doesn't help. So only thing you could do is to, sell a short put spread. So I too have an iron condor, convert it into iron condor. That's all we can do. But I have zero complaints. Pretty happy with Melee's performance this year. Right. See, Facebook is rehiring, increasing headcount by 400. Will be good to see which division is Meta rehiring. And Dave says Meta has done amazingly well. Absolutely. And this was given like with that, there is so much pessimism around Meta. After Brad Gerstner from Altimeter Capital came up with an open letter around the whole Meta's plan of spending $25 billion over next few years, $10 billion per year on metaverse. Even the fact that they were around $100, even low than $90 in November, up to all the way up to 150 this year. So it has done tremendously well. I still hold Meta, started building position in 2022 and pretty happy, continue to hold this one. Eventually, whatever had happened to Meta was its own doing, right? Anytime if Zuckerberg come back and say, he's gonna pivot or reduce the spending on the metaverse initiative, the market will be back behind this particular stock. It's just that he chose to move and take a huge bet on metaverse, which the other investors didn't like it. The stock was beaten down. The non-metaverse part of the business, right? It's still it's still one of the biggest ones when it comes to the advertising. Google, Facebook, from ad perspective, that business is still strong. But just that no one liked Meta to spend that much amount of a capital on a new initiative, which we don't even know when will it start to generate any money. But now I'm more hopeful, and I'll go through why I'm more hopeful around the whole metaverse strategy, right? As a metaverse as a concept, because we are seeing one more big player stepping into that. Ramesh says, never short calls, own 100. Yes, can't complain about gains. Yeah. So even if I own 100, I still will never, me personally, will never do just a covered call, because I think I'm still, Melee has got still a lot of steam behind it. I'll review once they come back with their earnings result. We'll review the result. But overall, the past weeks, not last quarters, that all the results that I've reviewed, I haven't seen it any big concern on the business side, right? Of course, the market behaved the way it behaved in 2022, and I used that opportunity to add a lot of melee in my long stock position. But I'll probably sell call spreads. That's what I've been doing. Why not selling covered calls? I've been selling call spread on melee. I think I will still sell call spreads on melee. Okay. I still love the stock, guys. I still love the stock. Okay, don't get me wrong. Unless their business changes, which we'll get to know in the next quarterly report. Until then, I'm not going to change my mind. I never changed my mind when it came down from 2,000 to 800. Use that opportunity to buy some more stock at 700, 800 in 2022 because the business was still okay, and I'm still okay with melee, unless they come with unless they change their business stuff. Yeah. All right, what else I saw? Okay, this is what I'm hearing now. After ChatGPT-3, I think every crypto founder has now become AI founder. Every Web3 startup founder is now moving into becoming a founder of a company which is doing something with AI. To me, looks like AI is a new .com. Was it yesterday? A new VC, almost $500 million invested in a couple of startups by VCs who are going to build a competitive product to ChatGPT-3. One side of my mind tells me I am bullish and know the overall we will start to use these tools. But sometimes some things move so fast that somewhere on the back of my mind, I'm like, this is too much too soon, right? In any way, BuzzFeed, I think I was sharing the chart earlier. The reason why it went up almost 300%, 400%. Again, I don't invest in this. I never tracked this. The only reason why it came on this was onto my radar was in relation to the AI stuff. They announced that they're gonna use ChatGPT-3 to create content. That was one, and the market went just crazy behind it. So that again tells me all the news that we are seeing around AI, I think a lot more hype in the short term. Every tech goes through this whole cycle. Websites went through this cycle in 2000. Crypto went through this cycle. AI will also go through this cycle. Remember Clubhouse was in 2020. Everyone was talking about Clubhouse, right? At some point of a time, it was valued at $10 billion. It raised money at $10 billion valuation, right? In a few months. And you couldn't even get it became kind of an exclusive Clubhouse because someone needs to refer you to join the Clubhouse. You couldn't even join Clubhouse. Today, no one talks about it. I mean, that whole flash lasted for 6 months and it's gone. Whereas the concept of the Clubhouse, which is having more audio conversation, that concept is still there. Twitter Spaces, right? But some of these things become too hot too soon. And when you start seeing the shares of the company going higher just because someone talked about AI, someone talked about blockchain in 2017, and someone talked about DeFi in 2020, 2021, then there's a lot more hype coming into it, right? So anyway, watch it for the space. A lot of VC money is going into it right now. Microsoft, as we all know, they already $10 billion stake, almost 40% or 49% stake in OpenAI. the creators of ChatGPT 3, but a lot more other money flowing into this sector. So be cautious if you are looking at some companies which claim to have a product around AI and the stock is going higher. Shopify went up. Yes, I'm proud owner of Shopify. So my covered call is being challenged. No worries, we have a short put against it. But the reason why Shopify went up, again, I think it went up too much too soon, should I say? Let's look at Shop. Let's look at Shop. Where is what? Let's start off this month around, say there, around 35 to almost 50. Yeah, it's 35 to 50, which means almost close to 50%. Not exactly, but close to 50%. And the reason why Shopify went so high, there are two things. Obviously, the market overall is moved into the growth companies, but the specific reason why Shopify went high was they increased their monthly charges. So for all tiers of their subscription, they increase the rates. So Shopify has kept the same rates for last 12 years, but now they announced that they're going to increase the rates. That was the reason why the stock went a little higher. Other than that, I think it's all generally market became more risk on, and then we saw Shopify going higher because of that. Yeah, but it's again still a good company. I think I'm still bullish on it from long-term perspective, so still continue to hold it. Dave says, feel like blockchain, Long Island iced tea blockchain. I'll never forget that. Yes, an iced tea company renaming itself to a blockchain company. Geez. If AI is so hot, is Palantir going higher? So I am, the more and more I look at Palantir, I am, from what Palantir is doing from a tech perspective and from business, I am bullish on Palantir. And I think I updated when I added a lot more Palantir to my long stock position a few weeks ago. Right? The product that Palantir has, no one else has. Right? The bearish thesis around Palantir is that most of the revenue is coming from government where you don't have a pricing power. Right? If you are dealing with Pentagon, if majority of revenue is driven from you're dealing with the government, then your valuation will be more like how other tech government contractors are, right? And let's say Booz Allen Hamilton. Look at the multiples that those companies have and the multiples that Palantir have. Right? Palantir was valued at way higher multiple than other government contractors, right? But so that's why I didn't have Palantir for some time in my portfolio. Reason why I started buying it, because they pivoted their business model to focus more on the commercial side. And every quarter, we're seeing that the amount of revenue that they are generating through the commercial segment, non-government segment, is increasing. Right? So then it becomes like any other software company, right? And from that perspective, then the Palantir multiples looks okay. So my bullish thesis behind Palantir, number one, is the product that they have, no one else has. Number two is their focus on generating and increasing more revenue from a commercial segment. If the commercial segment starts to go down, I reserve the right to change my opinion. Guys, business changed, opinion changes. But until then, I think I am bullish on Palantir. So is PLTR AI more powerful than ChatGPT? I think both are on a different one. So what Palantir does is very specific in order for, let's say, creating digital twins and all that stuff. Of course, they have a lot of stuff around the location. They have two products, Gotham and Foundry. Gotham is for the government sector. Their foundry product is for the commercial one, and these are not. So again, the AI concept is same, but the usage of AI to create a products, you can create two completely different products from AI, right? So I think it's too early to say. I don't think that these are like, we can compare Chat GPT 3 and Palantir product, because that's like apples and oranges. Right? But so far I'm bullish on Palantir, especially at the price point where it has been trading now. Right, I started building what, around $6, when it was around $6 dollars. Started adding to my position, and yeah. So, but we'll see. Let's wait to hear when its next earnings calls is. When is Palantir's earning call? PLTR. What the heck happened? So this was Tuesday? This whole swing in price is 120, sorry, 123. Oh, that was 24. Yeah, this is Tuesday, right? See, this is what happens on Tuesday. Looks like Palantir was one of the stocks because of NYSE problems. It had a wild swing all the way up to 8.74 and 5.84. All right. Yeah, so Palantir's earnings are coming up on 2/10. So we'll see what earnings has to say. The other big concern on why Palantir shares have been so beaten up was around, if you look at the price to sales is 8.23. Right? Still, from a normal company, S&P 500 company perspective, 8.23 is high, but not high when you're looking at growth companies. Right? These things used to be around 40 in 2022. All the valuation contraction, a lot of valuation contraction has already happened. Sorry, the other big thing that we need to watch out on if you're interested in Palantir is their stock-based compensation. It's been notorious. Palantir, when it comes to how companies misuse or disguise their cash burning or increase their cash flow by paying a lot of stock-based compensation, you will always hear Palantir's name. But over the last 2 quarters, management has focused on reducing or managing the stock-based compensation in more investor-friendly way. Right? These two things, commercial segment and the stock-based compensation, are the two big, I would say, my investing thesis. If I change that, if I see that there's a big change in opposite direction, I'll reverse my opinion. But so far, it's been they are moving in the right direction. So Palantir could be another long-term hold like Melee. If you are asking me, so when I'm again, I want to be clear, when I talk about these stocks, individual stocks, most of the time my outlook will be more than 5 years. Right? I'm not the one who I'm gonna buy it so that I can sell it for the next 1 year, in next 12 months. Right? That's just not my style of investing. So I have not seen any reason from Palantir to get out of position right now. But if business changes, or if CEO is the management becomes rogue, CEO is accused of misappropriations, accounting frauds and all that, of course, then I'll change my opinion about Palantir. But as long as I don't see any changes in how the business is operating, if stock goes down 15%, 20%, it's okay. Next year, stock is down 20%, well, that's fine. I'll hold it. So yeah, generally, most of my positions that I'll open, I mean, there may be a few ones where I want to take a short-term swings, but majority of the positions that I buy is to buy for long-term. And of course, the fact that we can use options to reduce the risk, then why not buy for long-term then? We can always use options to reduce our cost basis. Now look at a Neo. Cost basis is less than zero. And I've seen all the seasons of Neo. I've seen Neo at $2. I've seen Neo at $40. And I've seen Neo back at $3. But now, how do I care if my cost basis is like negative $5? Sold so much of a premium on Neo that it's like always like infinite return because my cost base is less than zero. So who cares? So yes, what about recession risk on Palantir price? Recession, we are talking about 2023, right? I don't think we're looking at a recession to continue for next 5 years. So I don't worry about a recession. Again, Palantir is still, it's a high risk investment, so position size is accordingly. For me, right now it is less than 1%. So the reason why I'm adding is not that it is already 10% I'm adding to it. It is less than 1%. So I do want to add it, maybe make it up to 2%. Right? My biggest position is like Melly is maybe 5 or 6% now. You'll see in a position, a portfolio pizza in our next session anyway. I'll share the top 10, right? All right, so that's on Palantir, AI.com. Other one that caught my eye, it's something that I don't have any exposure to. And do let me know if you have exposure to nuclear. But during Davos, looks like a lot of folks are starting getting back onto why we should go nuclear now to solve our energy crisis, right? South Korea said the nuclear will account to almost 32% of its power, up from 24%. We are seeing US also has provided some support for nuclear, keeping the plants online. I mean, US nuclear plants are 50 years old, and those are being decommissioned. So the new IRA bill have some support to keeping the plants on and subsidize building smaller and more flexible reactors, not build the big reactors, which could cause, we had those in 1980 Chernobyl incident in Russia. That time is for USSR. I don't know if Chernobyl is in USSR or is in Russia, or was it is it out in some other country? But yeah, it was in USSR at that point of a time. And then we had Fukushima in Japan once the Japan tsunamis happened. So there is a lot more focus on building smaller reactors for power generation. So again, for IRA Act also have a more subsidies for those kind of reactors. So TerraPower is building a new reactor in Wyoming. 2 new are expected in Georgia this year. So first in US since 2016. So there's now, when you talk about energy, renewable energies, nuclear energy, and the fossil fuel energies. Now we are seeing top 5 generators of nuclear power. France is almost 70%. Right? China has a plans to add a way more nuclear power capacity for their power generation than US. So given this fact, and given the fact I have zero exposure to nuclear, I was looking at what are some of the companies that operate in this area when it comes to the nuclear energy area. Again, no recommendations. I don't know which company does what. I haven't analyzed any one of them, but this was my first step to even know, because what are the companies that are in this phase. So Cameco I think it's a Canadian company, Cameco and Centrus Energy, small reactors, NuScale Power, uranium producer. These are, as you know, these are the big mining companies, BHP Billiton and Rio Tinto, and a lot of other companies. I thought I'd just throw some tickers in case if you're interested in nuclear energy and want to get some exposure. Right now, I have a zero exposure, disclosure. I have no exposure to uranium or to the nuclear, but maybe could become a little interested in this. So some tickers for you. You can do your own due diligence. But if someone of you already have an exposure and want to say something about it, feel free. We all can learn from each other. It's not just I have to talk. I have no knowledge on any one of these. But if any one of you is holding any of these tickers and want to share your thoughts, do let me know. Come on stage, talk about it. Meanwhile, Dave asks, now how is the economy in San Jose, San Francisco, or the guys who got laid off by big are able to find another job in few weeks? The stock market is not reflecting tech layoffs. I think the stock market actually has reflected tech layoff, right? Bad news for employees is good news for the shareholders. That is why you should focus on building your additional stream of income than just being dependent on a W-2. Microsoft says we're going to lay off people, stock will go up 2%. Google says we're going to lay off people, stock will go higher. Meta says we're going to lay off people, stock will go higher. So stock market is reflecting the layoff. Now, the type of employees that have been laid off, they are not much bothered from a recession perspective. Right? So will that's why we're not seeing too much impact from a layoff on the economy perspective. That reminds me, yesterday we had to drop our kid to her school for some function, and me and my wife, we thought, okay, let's go out for some dinner. And I went to a place nearby my house. It took me 5 minutes in the parking lot to find a parking space. And I was talking to my wife, I'm like, where's the recession? Where is the recession? There are so many layoffs happening, especially in San Francisco and in this area. I'm like, I can't find a parking space. So eventually, I dropped my wife in front of a restaurant. I say, you go and see how long the waiting time is. I'll go and find a parking space, and then you call me if the waiting time is too much. That's the case. And you talk about recession. Yeah, I think looking at the labor market, right? Even if the tech layoff has happened, labor market is still super strong, and that's why Fed is, unless the overall unemployment rate goes higher, it's difficult to get the recession. So still, and if you don't get the recession, inflation won't come down, then the Fed will not going to reduce or pivot. The wage per hour overall have come down because the high paid wage workers, the workers which are in tech, workers which are in Wall Street, these are the only two areas where we've seen layoff. Wall Street, financial sector, Goldman Sachs laying off people, and the tech sector. But those are highly paid workers. They have enough savings or investments to go through this layoff period. They're not going to cut down on eating out. Probably they'll cut down on buying a $2 million house. I would just say house because it's not a mansion in Bay Area. $2 million 3-bedroom house if you're lucky. They may not buy that, but they'll still continue to spend on the general economy. That is why on the services side, we are still strong demand of labor. You don't have people. Which is was it a restaurant or a bank? God, something came a flash by my in our neighborhood. He said, I think it's a restaurant which I've told that they are actually cutting down the services, the hours of service because they don't have people. They don't have people to serve. So when I talk about service industry, there's still strong market in there. Tech, of course, we had a lot of a flab now, which we are just rationalizing the tech sector when it comes to employment. Right? If I were to believe the report in Wall Street or in Bloomberg, wherever it was a few weeks ago, if those people who are being laid off in tech are willing to move towards non-tech company but work in technology, they're able to find job in 3 weeks. That's on an average. In a 3 weeks, software engineers are get back to the job. So I don't think that right now I'm seeing the effect of recession. What at least I'm noticing on the San Francisco, San Jose area is overall general economy, and what are the impact we are seeing over there, the same stuff. Yeah, CNBC says that some tech workers going to non-tech firms. Yeah, I mean, every company has a need for tech workers. Every company have IT projects. Pharmaceutical company, banking company, every company, right? So, of course, they may not pay you as heavy as what Meta was paying or what Google was paying. May not have those massage therapists. You may not have a daily yoga sessions, right? But you'll have a job. Yeah. Walmart, they have a big tech department, right? But you'll still have a job. Walmart, Starbucks is hiring and raising hourly pay to get people. CVS and Walmart have also reduced their pharmacy hours. See, there are not people. Be willing to pivot in terms of what you want to do in life. They don't have to complain about, I don't have a job. I think, especially in the US, when I hear some complaints about, especially in the tech, and don't get me wrong, I'm in tech sector, right? So, but if we are inflexible in terms of what I want to do, then we are, it's our inflexibility. Right now, the job market is still strong in the US, but not in tech sector. All right, a quick look at Microsoft, or maybe we'll come to earnings a little later. Microsoft, Tesla, ASML. Yeah, I do want to talk about the next big thing which I read on Apple. It's a mixed reality headset. So we've been waiting for, so Apple, after Steve Jobs, the only new thing we got from Apple was, I would say, Apple Watch as a consumer, right? That was the only, I would say, big innovative product that has come out from Apple. Others were all incremental improvements, right? iPhones, Macs, Apple TV, Apple TV, whatever, that set-top box. Read somewhere, I can't recall the source of this, is around the mixed reality headset and how it's supposed to work, right? And when I was reading through it, I'm like, wow, that's amazing. I would like to have one of these if it does what it claims to do. This also made me bullish on the whole concept of AR, VR, right? Couple of companies that I own my portfolio, Snap, Meta, which are focused on this AR, VR / metaverse. I mean, right now, I think each company will have a varying degree. It's a continuum, right? You are completely VR, which are completely cut off from the world, to completely in real life, right? You move into here, augmented. Some companies will have a augmented plus VR plus AR. Some will have completely VR. So, but the whole concept, whole idea around adding digital life to the real life, I think that's going to happen. I don't have any doubt about it. So now Apple is looking at a mixed reality headset with almost price point is almost $3,000. We'll see. It will have 14 cameras. If you are wearing one of these, it looks like a robot anyway. It's got a 14 cameras which will look at your lower body and create a replica of your body, like not a cartoon figures, but almost look like avatar in your metaverse or in your virtual verse. I don't know if metaverse shouldn't give you a hint that I'm talking about Zuckerberg's metaverse, but let's say in your virtual work, right? It will have iOS-like interface to launch an app when you're wearing that I don't even know how it looks like. I don't think there were pictures of it. Apple being very, very, very secretive, they won't release anything. But if you're wearing it, you can actually, and the interface that you see is your iOS-like interface. I want to do FaceTime. I'm gonna just tap, right? Apple has got more than 1,000 people working on it for 7 years to make it a new source of revenue. So how it will work? Like I said, it will have 14 cameras. There are many external cameras that will be able to see our hand movement. Right? If you, again, the whole concept of Steve Jobs is God has given us many stylus. God has given us controllers. So that's why he didn't want to, even though Microsoft was the first one to come up with an equivalent of iPad, but then Microsoft product was using a stylus. And very famously, I think Steve Jobs told, God has given us, 5 stylus in one hand, or let's say 4 if you're not using your thumb. So similarly, now most of the products in the market currently, which are around metaverse, you use controllers. You are wearing your those headset, but you wear your controllers, hold your controllers to navigate around it. Very typical of Apple. They don't want to use any other external controllers. You basically use your thumb index fingers to activate the tasks without any need to hold anything, right? Like the Meta's latest headset, I think Meta's headset is around 22,000 plus. It will have both VR and AR, right? It will allow the FaceTime software realistically render user face and full body in virtual reality. So if you are FaceTiming with your loved ones, and both of you have Apple headset, you'll feel like you're in the same room. You'll not just see, like, I think right now in the Meta's Oculus, you only see half of your body, that too in avatar form, right? Not really your face. But Meta is working on a next gen of their headset in which you will be able to see legs. And that was, I think, a heading of an article I read. You'll have that your avatar will now have legs, right? But anyway, Apple does the same thing. You will see your own or the other person's full body in the virtual reality when you're doing a FaceTime. It's almost like you're sitting in the same room, right? So that's one. It will work because it will be able to. So there are cameras external to manage to look at your hand movement. There are cameras internal, which will look at your eye movement to know which application are you trying to pinch or you're trying to tap in a virtual iOS that you are seeing in your Apple headset. To think of like this is like science fiction coming reality. This is what Minority Report had. If you remember that movie, Tom Cruise's movie, Minority Report, it was Tom Cruise, right? Or was it some other actor? Refresh. Minority Report, I think it was Tom Cruise. Wherein the whole concept of that movie was you see the crime happening in future, and then you go and try to prevent the crime before it happens. That was the movie's plot. There were ethical questions and all that around the movie. Well, the best thing, few things that if you see on a Minority Report, images are the ones wherein you'll see those images displayed in air, and Tom Cruise and other police officers, they're pinching to, pinching and moving around to expand the image, swiping it to get the next image. Now, looking at all this, doesn't look to be sci-fi anymore. A Tom Cruise and Schwarzenegger. Yeah, and Schwarzenegger version, yeah. Now, this is exactly what we're talking about. This is what Meta, aka for FKA, formerly known as Facebook, is trying to do. And this is what Apple is also trying to do. Apple find a few patents around it. I think, so this is all information I should have noted. Where did I read it? But based on all the patents that Apple have filed, and a lot of journalists going behind trying to figure out. This is what Apple is focused on. And yesterday I saw a LinkedIn notification for a job opening in Apple's VR group. Anyway, discount that, but irrespective. So that is not sci-fi anymore, which was 25 years ago. Other thing they want to do is immersive video watching. So when you're watching a video or a movie, and Apple is also working with many media partners, Walt Disney, Dolby, etc., to create a content that you can watch as if you're sitting and watching this, let's say, watching in a different environment. You're watching it in a desert or in an outer space, like I'm sitting in outer space. It's just a background. Imagine if there's a space all around me. So the movie watching could become immersive. While the headset video will be immersive, speaker will be less powerful, so users will need to wear earbuds. Right? There we go. Another at least $150 purchase you have to make. This is how Apple milk. I think a few weeks ago, maybe a few months ago, we did the whole study around how Apple's AirPod business has taken folks by surprise. It's become such a big business. And what are some of the strategies that Apple used to create AirPod as a big $20 billion worth of a business from nothing? And some of these techniques. Now, if you had got such a nice headset, you would want to have a good surround sound. So you'll spend another 150. That point of time will be $250. It will also have some productivity features. And this is what I think Mark Zuckerberg displayed in their Horizon workspace is today, if I would need to have multiple monitors, which right now the table I'm sitting on, I have multiple monitors. I have multiple physical monitors, right? Because I need to work on multiple monitors. Now, what Meta has shown on their Oculus and with a combination of their app of Horizon Workspace, and what Apple is trying to do is that your virtual space will act as your external monitor. You can actually have 2 or 3 monitors in the virtual workspace, right? And when you connect your headset with your laptop, and right now I think it works both with Mac and Windows, your virtual workspace become extension of your monitor. You can have some apps run on your virtual workspace, some apps on your physical laptop. And when you put on your those, whatever, I don't know what they call, goggles or a virtual reality headset, whatever that physical device is, then you can seamlessly work on your virtual monitor, right? So much so, you can actually type on your on your physical keyboard, and it will appear on the application which you have opened in your virtual monitors, right? So that could be great as well, right? For example, I'm just looking at, if you're a day trader, which I'm not, but I've seen many day traders having like 5, 6 monitors, because I need to watch 1 minute chart, I need to watch 5 minutes chart, you need to watch whatever, or I don't know, whatever. If some of your day traders, you probably know more than me, right? And then you have one running news, another running Bloomberg, another running what? Now imagine, if you are coming down, you don't want any disturbance. You come here to put your this headset, goggle, and now you are in your zone, in your trading zone, and you can configure that virtual stuff, the way you want to, and you're seeing those 6 monitors. Isn't that amazing? That's what I'm looking at. Eventually, it becomes a huge productivity tool. In that case, I would want to buy one. I come here, I don't have to, then I can have multiple monitors don't have to invest in that. And then when I have to, let's say, if I have to spend 30 minutes on trading or looking or doing some something around investing, I put that on, boom, I have one monitor wherein everything around my investing is open. Okay. So again, these are the productivity features that which Apple will have. So even the Meta will have. Is it usable from day one? Based on the feedback that I've seen from the Meta one, it's not that great from day one experience, right? But knowing what Apple does, Apple is all about user experience, is making it easier for user to use. They'll figure out how to make it better, right? So, but this, I think more than Apple Car, I'm probably thinking this may be the next big thing that Apple is relying on to generate a next set of revenue stream, right? What's new? What's now? Services was one. Your AirPods was second one. What's next? Maybe this is going to be the next. So we'll wait. So that's why I'm still bullish on Apple. I know there are a lot of questions around Tim Cook's ability to innovate, but I think he's done a fine job of running the company so far. So I'll still be a shareholder for Apple. Dave says, why bother with that when have the AI bot trade for you? My buddies are doing that using Python and TOS and Thinkorswim and interactive brokers. Yes, there are sites where you can actually go and configure your own bots. I haven't yet warmed up to that because I don't have the need to trade too much. But yeah, if you are a kind of a day trader and you want to trade on specific signals, whatever that could be, right? RSI oversold, then sell it. If it is RSI is below 20, you buy it, or whatever. If you have a golden cross on your 250 MA, buy it, whichever way. Yeah, nowadays AI is there to help. In fact, I had a task for myself for AI to use ChatGPT 3. I think I bookmarked one of a post in Twitter in which one of a Twitter user had explained how you use ChatGPT 3 to write some Excel formulas, and another commented that he used it to write Thinkorswim scripts. So I thought, okay, I need to spend some time on ChatGPT 3 because I do want to see some data on my Thinkorswim platform, which I don't think that field exists by default. So I'll have to write Thinkorswim script. So I thought, I will use ChatGPT 3 to speed up some Thinkorswim script for me. But again, that's more to know a particular data element about a stock, which TOS doesn't have. But yeah, today AI bots are already trading for hedge funds. They're already trading for high frequency traders. But I think the day won't be far away when even the retail investors will have access to these tools to trade the way hedge funds and those are trading. Now, is that the right thing to do? I'm not commenting on that. Okay. High frequency traders, market makers have a different reason why they are trading. They're only making money on the spread. They're not making money because the stock is going to go higher, or they won't lose money because the stock has gone lower. Right? Their motive of trading is different. So I don't know. I mean, as an investor, you need to know how you want to trade. But yeah, the tools will be available. Is that appropriate for your way of investing? That I think only you can tell. They say, I know people who are trading with 6 monitors. And people proudly display that, those 6 monitor setups. So I have 2 monitors. And those are good enough for me. I mean, I use the same for my work. So for my work, it's good to have 2 monitors. All right, Sam's got a call. Thank you for joining today. All right, so that was around Apple, which I think may be a next big thing. Well, only time will tell. Right? I don't have a crystal ball, but keeping an eye on what we are seeing in the market, the patterns that Apple is filing, the reports from the journalists or the investors or the hedge fund guys who source, keep an eye on those things. It's good to get some read on it. Thought I'll share with you guys. What else? So anything else caught your eye? So now what we are 11:37, close to 20 minutes. Two things we can look at. Either we can look at I had topic to talk about bonds. There are certain terms around bonds have caught investors fancy over the last 1 year because of increase in the Fed rates. And now everyone is like, guys, if I can get 4.5% by investing with the best, what do you call it? If I can loan it to the best party in the world, which is US government, zero risk, if I can make 4.5%, why do you want to take a risk on a stock? So over the last year, a lot of money unflowed into bonds. A lot of money markets bought bonds. A lot of individual investors have bonds. We talked about I bonds and treasury bills in some of our previous sessions, but there are a few things that we have not spoken in terms of some of the terms. So I thought I'll cover that. Or we can look at earnings. Which one you want to go? Meantime, I'll sip some water. Oh, that's a coconut water. Bonds, earnings, NVIDIA, AMD, please. Actually, I didn't look at any of those, but maybe we can. Maury says bonds, Dave, like whatever. All right. Okay, so let's see what all we can. Let's start with the bonds. Then we jump on to earnings. First of all, bonds. What are bonds? We have a bonds for government. We have bonds for corporations. We have bonds for our municipality. Basically, anyone who wants to raise money and will give you guarantee of some return is what a bond is. The person or the entity is bonded to legally bonded to give you that return, right? So these are the loans that investor make out. So you can loan your money to US Treasury, right? Don't we feel powerful that I can give money to US Treasury? Isn't that great? US government is dependent on my money. I can fund them. Or you can give money to corporations like Apple, right? Apple, time to time, all these companies raise money because it was so cheap to raise money, especially over the last 10 years. There is raised money at 1%, 25 basis points, 50 basis points. So these are all bonds. There are government bonds, there are corporate bonds, there are municipal bonds. Or you and I, we can enter into a so-called bond, legal bond, in which I pay you some money or you pay me some money and agree to pay some interest to you. As an individual investor, where you can buy bonds, this topic we had touched earlier. Also, you can buy directly on Treasury Direct. It sells the government bonds, basically US Treasury bonds. You can buy directly on US Treasury Direct, or you can buy bonds on a brokerage account. Like Steve mentioned, 4.81% for 6-month T-bill at Fidelity. So you could buy it at Fidelity, you could buy it in your TD Ameritrade account, or you could go to treasurydirect.com and buy bonds there. So when I say I'm using the term bonds, but it will mean the T-bills, T-notes, as well as the bonds. And everything. I'm clubbing all of them into one single term called bonds. But from a differentiation perspective, anything which is less than 2 years, I think it's 2 years or 1 year, those are called bonds. Anything less than 5 year or called, oh sorry, anything less than 10 year is called notes. I think anything more than 10 year is called bonds. So you got a bills, short term, notes, medium term, bonds is very long term. That's the differentiation. Everything else stays the same. So you can buy on this website, or you can buy it on a brokerage account. But now there are few, if you go to your brokerage account and try to buy this, you will see some terms. And that's what I want to talk about now. I don't think we ever talked about those terms earlier, which is, let's say, face value, par value, right? There are 4 or 5 terms that are important, so that then you understand really what the bond that you're buying, what actually you're buying, because they will describe the bond in these terms. So face value is a par value. This is the principal, the original amount borrowed for each bond. So one bond, generally the face value in a typical bond is $1,000. Right? Means one bond is worth $1,000. And the way these bonds are sold is, if you buy, let's say, a treasury bill or note or a bond, you will get $1,000 at maturity. So it means not that you have to spend $1,000 right now. This is the par value, or the face value is what you will get at maturity. So what do you have to sell right now? What do you have to spend to get that bond? That could be $995. Right? And it's a 1-year T-bill. So $995 you invest right now, and in 1 year you get $1,000 back. So means you earned $5 on $995 investment. It's maybe around 5 point some percent. And that's what, when we say my coupon rate is, that is what the interest payments are, right? So that's how they calculate. So you get on a maturity, what you get is a par value or the face value. So when you see the face value bond is 1,000, means you're going to get $1,000 on maturity. The other information which you would see, or the other term, is coupon rate, which says this is the rate which is used to calculate the periodic interest payment, right? So your interest payment will be coupon rate multiplied by the par value or the face value of the bond. So going back to this example, or let's say going back to example, what Steve has mentioned, say 1 year AA bond, and here AA bond, Steve is talking about corporate bonds, and corporate bonds have different kind of ratings, AA, AAA, BB plus. There are agencies that rate those bonds, and higher the rating of the bond, lower the coupon rate. Lower the rating of the bond, higher is the coupon rate. Yeah, sorry, I digressed. We'll go to the corporate bond maybe a little later. I don't think I want to talk about it, but we can talk about it if interest. No, so what this 6.34 or 4.81 could be your coupon rate. Means if I invest $1,000, then in a year I'll get 4.81 of 1,000, about $48. Right, 4.81%, $48 is what I'll get. That's my coupon rate. But that's if you are buying, and that's your yield to maturity will be. Right? You bought a bond at the start when it is being auctioned on, let's say, treasurygovernment.gov. So if we bond here, if you buy a bond here in the auctions, right? Let's say upcoming auctions. You see, there are 13-week T-bills that are being auctioned, 26-week T-bills that have been auctioned. If you go back at a previous one, there are 4-week T-bills which is being auctioned. right? You get whatever 4.579. So you will pay $99.65 and you'll get back $100. Right? So similarly, so if you buy this and you hold it till maturity, so its issue date is 1/31, it's a 4-week, probably will mature by the end of February. You will make whatever that 4.579%, right? Or your coupon rate, you'll make your coupon rate. Your yield to maturity is exactly same as the coupon rate if you buy at an auction when the bond is created, when the bond is issued and hold it to maturity. But this may not be the case if you are buying it from, let's say, secondary market. That's the reason why this yield to maturity and the coupon rate is, it's important to understand the difference between these two. Because if you're buying a bond from a secondary market, you go to your TD Ameritrade website, you go to Fidelity, and say you're buying a 6 months T-bill. But the T-bill was issued 2 months ago. So right now it has 4 months remaining. Right? So if we look at the T-bill that was issued 2 months ago, that might show you that his coupon rate is 4.8%. But your yield to maturity could be different. Now, the yield to maturity is what will your investment yield at the time of maturity if you buy the bond today. And the reason why this will be different is the price that you pay for that bond will be different based on the changes in the interest rate that have happened in last 2 months. So now that means, so if the interest rates have gone down, say 2 months ago, whatever the interest rates were, and now if interest rate have gone down, like Fed has reduced the interest rate, Fed is still increasing the interest rate. So if the interest rates, let's say, would have gone down, then the bond price would have increased. You would have paid higher price. So your yield to maturity will be different than what someone will be different than coupon rate, because then it won't be 4.8%, because you're not paying the same amount what someone who had bought at issue date was paying, right? So it is, if you are investing or buying these bonds from the website of brokerage firm, if you are dealing, that's the secondary market, the term that you need to pay focus on is yield to maturity. Okay, and not the coupon rate. Third is yield to worst. Now, yield to worst, again, depend on some of the bonds, especially the corporate bonds, the bonds that are issued by companies. They are called callable bonds. These government bonds are not callable, like treasury bonds, treasury bills are non-callable. Means once you buy those treasury bills or notes or bonds, you can hold it till maturity. US government, Treasury Department won't come and tell you, I want my bonds back. Take back your money, I want my bonds back. That won't happen. But in case of the corporate bonds, let's say bonds issued by Apple, bonds issued by Caterpillar, bonds issued by, pick your company that you love. Those could be callable. That you have to see when you're investing, is this callable or not. Those could be callable after a certain period of time. So they would mention, this bond has got a par value of 1,000. It's a 5-year bond or 5-year note, callable after 3 years. That means, well, if you invest, company can call those bonds from you ahead of the maturity. right? They can call from you after 3 years. So in that case, you may not get the same yield because you didn't hold the bonds all the way to maturity, right? But that's called yield to worst. So if you look into, let's say, TD or Ameritrade website, or go to Fidelity, and if you want to look at, bonds, CDs, etc., you will see this YTW, right? This is called yield to worst. And again, this depends on, some companies will do it because they want to protect themselves in case the interest rate changes. So for example, if I'm raising money right now in the market, today I have to pay 5%, right? Because Fed is, if US Treasury is giving you 4.5%, you won't pay, if I were to buy money from you, you would want, because I'm riskier than Treasury, you would want better rate. So I'll have to offer you 6%. But I know that Fed is going to reduce the interest rates going forward. It might pivot. Then I don't want to pay you 6% for next 5 years. Right? So then I could have a condition wherein, I may call it. Now, again, there are more nuances to it in terms of when companies will call it. Right? But if you are holding a callable bond, right, then you should know what's your yield to worst is. Okay, I think then we talk about why the bond prices fluctuate as interest rate change, because of a simple reason. Right? If I'm investing right now for the next 3 years, I have a choice. I can go and invest in a newly issued bond, which I can buy from Treasury Direct, or I can invest in a bond that is already trading in a secondary market in which there's a 3-year maturity still remains, right? So mathematically, for me, it will be agnostic. Both of them should be giving the same return, right? But again, we can get into details of to have that same, for a new investor to have that same return, why the prices of the old bond will change based on how the interest rate have changed. But that's all. Generally, that's why you see, if the interest rate goes higher, then the price of the bond goes lower. Because, of course, I don't want to buy the old bond, which was paying a lower interest rate, right? But the interest rates goes lower, the prices of the bonds will go higher. Okay, so again, which bonds do you want to buy? You may invest in short-term or long-term. The idea is why you want to buy the bonds. What's your purpose for buying the bonds? If you're buying it for income, then you might want to own long-term bonds if the long-term rates are higher than the short-term interest rates. But if your short-term interest rates are higher than the long-term interest rates, then you may want to stick with the short-term bonds for now. Because right now I can get more on the short term. But if you think that the long-term interest rates are gonna increase later, right, then you may want to switch. So that's a combination you have to make depending on what's your outlook, how long do you want to hold the bonds, and what's the purpose for which you want to. Should we buy individual bonds? Or there are ways to buy bonds. One is you can buy individual bonds, or you can buy bonds ETF, or you can buy bond mutual funds. Only I hold disclosure, I hold an individual bond directly from Treasury Direct. Other thing which I hold is just the TLT bond, which is a long term bond, right? Now, the reason I hold TLT, again, when you're holding long-term bonds, this is what happens. Over the last 1 year, interest rates have been increasing. So value of the bond has been going down. That's why you see, let's go back and look at 3 years. We have seen, because the interest rates from 2022, Fed started to increase the interest rates, and this TLT bonds started to go down. Now, the reason why I started opening a position now, because of the same reason. How long will Fed continue to increase the interest rate? And number two is TLT has got a good volume. If you look at 11 million contracts traded, 11 million shares traded, it's a good instrument if you're trying to, do option contracts on it. But that's the one which I hold in portfolio. It's a 20-year plus bond. Other than that, I hold directly on the Treasury website, but that's a bond or a T-bill ladder for 17 weeks, 4 months ladder. Right? They are paying decent 4.5%, 4.8% APY. Then why not? I mean, move the cash away from the bank account into the T-bill. That's just a substitution of cash, nothing else. You could buy a bond mutual fund ETFs also. There are, and I think there's one big mutual fund issuer is DoubleLine. DOUBLE DoubleLine. You'll see this gentleman on CNBC, Jeffrey Renlack, made a lot of money. Different type of bonds they have. Do your own research in terms of, which bonds you want to buy. But these changes in interest rate always used to confuse if you're investing in bonds, saying, oh, interest rates are going higher. Why I'm holding bond? Why it's going low and all that. So understand, if you want to invest in bonds, how some of these things move. Okay. And then I think there are I bonds. We looked at I bonds a few weeks ago. If you want to review it, maybe we can, but you can go back to a previous recording. I think I bond was what, 146. Yes, so I'll probably not review that. You can go and review the recording for this one, 146 session, where we looked at the bonds, bills, notes, and where you can buy and I bonds and some of the caveats around I bonds in terms of, the limitations of when you can sell, when you cannot sell, how the taxes work, how you can buy more than 10,000, blah, blah, blah. A lot of details around I bonds we talked about. Session 146. Okay. So cool. That's all around bond. Steve says T-bill is the best if someone have a kid going to college in 1 to 2 years. Yes, right now the T-bill is paying much. Should be around 4%, right? For 1 to 2 years. Let's look at the auctions. 2 years. Let's look at some previous auction in 2 years, like 4.1 to 5%. You have a zero risk. Right, and if zero risk, and if you want to save in the safest instrument, there you can make 4.1 to 5%, better than your bank CD rate. Eventually, that's what the banks do, right? Your savings rate. Banks will put money in the treasury, and they'll make 4.1 to 5. They'll keep 50 basis points or 100 basis points. Give you 3%. Steve, most bonds, even callable, will not be called because the cost of calling is higher than the interest cost. Maybe. Again, those are the nuances. I haven't been a bond investor. The only reason I started looking at bond was this 4.1 to 5% or 4.8% for 17 weeks was too good to ignore, to park the cash that I hold in banks. So that's why I started looking at it. But yeah, bond ETFs have duration risk. T-bill is fixed if holding to maturity. Correct. And I really didn't understand the whole duration risk in the article that I was reading. I thought I have to spend a little more time, but I'm not sure. Like I said, for me, bonds is little replacement of T-bills is replacement of cash in bank, and the TLT is just a little diversification and for good options income. But yeah, if you want to talk about the duration risk, Steve, you can come on stage. Do let me know if you want to talk about it, and I'll unmute you. So that's on the bond side, something new stuff that I was reading about. And let's go last on our some of the earnings that caught my eye. Of course, Microsoft. The headline number on Microsoft was revenue increased by just 2%. Right? That's okay. I mean, even for the last year, if you look for the last quarter, Amazon increased only 7%. Amazon has yet to report the earnings this quarter, so we'll see. But overall revenue increased only 2%. Not at all great. Earnings are not good. Operating income basically decreased. Not good. You don't want to see your operating income decrease, means your cost was higher. Net income decreased because of increasing cost. Diluted EPS decreased. Everything moving in the wrong direction. But generally, when it comes to Microsoft, we want to look at one thing. Right? The rest of the stuff is pretty solid. One thing where people want to focus on is how their Azure is doing. That's all drive a lot of volatility on the Microsoft side. So if we really look at it, overall Azure grew 31%, 38% in constant currency. So they do have a 7% risk of dollar being stronger in last quarter. So if now we know that the dollar is going lower, dollar is what? Dollar DXY. So let's go back to 1 year, 1 day. So dollar was strong, has been strong throughout the last year. Now, if dollar continues to go down, then that will provide some tailwind to these companies which have income in foreign currencies. And we'll see Mercado Libre is like 100% foreign. There are a lot of few companies that I hold which are impacted by this dollar strength. So again, Azure's growth had 7% impact because of dollar strength. Other thing, Windows OEM revenue decreased 39%. Not surprised by it, because all the pandemic, during pandemic, all the laptops that people wanted to buy, they already bought. The same was also reflected in Intel, right? Intel had a little disastrous earnings because Intel's lot of revenue comes from personal computing. And when you're not buying laptop, I'm not buying laptop. We bought two in I think 2021, I guess so. Right? Not buying anymore. So Windows OEM revenue decreased. Other good thing to note is they returned $9.7 billion to shareholders in share repurchases and the dividends. Right? So they still continue to buy back or do the shareholder friendly actions. So when this earnings came out, the market reacted negatively to Microsoft earnings, right? And of course, for the right reason. So it opened up lower, but eventually I think at the end of a day, it was a nothing burger. But then afterwards, because of the macroeconomic, We thought everything is now good. We saw rally even in the Microsoft stock. But eventually, if you look at over the past 3 months, Microsoft hasn't done much from we just range bound over there, right? Between 250 to let's say 220. This is the dream of people like us, right? Selling options, iron condors. So it blows your call spread. That's fine. Your long shares will gain. If it blows your put spread, okay, you can accumulate a little more at a lower price point. And if it stays in between, it reduces the cost basis. So that's the play that I've been doing on Microsoft. So I closed one at profit just before earnings. So we'll wait for IV to increase right now. This is the other thing that we've been noticing is that since last year, the volatility was high. The IV rank of almost all shares is down in the dumps. So for the next few months, I will actually start looking at a pure IV, not IV rank, to make my decision when trying to sell option for premium. Okay. Because IV rank is now being skewed by the high the individual volatilities over the last year. Okay, so that's on Microsoft. Again, I still hold it. We have seen that Azure growth is slowing, but it's still growing. I mean, growth is slowing means it is obviously you can't grow at a similar rate as your base continues to become bigger and bigger. Right? So Azure in 21, it was growing at almost 50% clip rate. Now it has 38%, ignoring the currency fluctuations. But still, anything above 30% is a healthy growth. But they are facing competition from, let's say, Microsoft. IBM probably gonna get bigger and bigger on the hybrid side. Haven't seen too much traction, but something to keep eye on. I think the competition they'll face, I think I misstated saying Microsoft. I wanted to say Oracle, because Oracle is becoming bigger also in a cloud player. So I think the heydays, the golden days of Amazon, AWS, and Microsoft's being the only player in cloud computing probably are over. But I'm not discounting it. Still, 38% clip is good. Right? So that's on Microsoft. Let's look at Tesla. Let's say Tesla earnings. Q4 revenue was up, better than expectations. EPS was better than expectations. Cash flow was down. Operating income or operating margins were a little down than what it was in the last year because, of course, they had to spend some money for real estate and reinvestment. So if I look at Tesla's numbers, there we go. Total revenue is $24 billion, up 37%. Gross profit is 19%, which margin has come down by 360 basis points. Let's look at operating margin. Operating margin is 16%. It was, if you look at your Q3, it was 17.2%. So little bit concerned, oh, are you spending more? But I'm not too big concerned about this. Not sharing. Is no one able to see? It still says to me that it is sharing. Are you still able to see the document? Oh, okay. So it's a pretty good quarter from some of the numbers perspective, right? You beat on revenue, you beat on EPS, and you have around almost $20 billion worth of free cash flow. Sorry, $20 billion worth of a cash equivalents, not free cash flow, but your cash position, right? Operating margins of Tesla has been going higher, which actually surprises me because they are the best operating margin in automotive industry. But Tesla doesn't consider itself as an automotive company, right? It consider itself as a software company. So what we saw, Tesla shares are up 50% since the start of the year, right? If you look at Tesla, it was what, 110, sorry, 100, 101, almost $100, and now this was, yeah, it's even up more than 50%, now 177, 70% jump since the start of the year. Is the earnings that good? So may or may not be. So few thoughts. One was, could Tesla be oversold? Because a lot of bearish news around the Elon Musk selling his stake in Tesla to fund Twitter purchase, and then his antics on Twitter, and then the lawsuits around Tesla. So he's already fighting 2 lawsuits on Tesla. So Tesla was oversold, hit 101. And again, we can say oversold only in hindsight, right? None of the analysts came and said it is oversold when actually was trading at 101. So now everyone will come back and say, oh, Tesla was oversold. Growth story may still be intact. So if you look, if you believe Tesla's announced that next year it can reach 1.8 million vehicle sales in 2023. It is not 50% higher than what they've done this 2022, but still it's a decent growth amount. So if they can still do it, the growth story is still intact. Is that good enough for 70% increase? No. Maybe. What else? Profitability fears are declining. Oh, in fact, the CFO came and told that investors are nothing to fear because many of the recent car deliveries were already at a lower price points. So in this recent results, Tesla's operating margin was 16%. And the investors have a question that now you have reduced the car prices, and we know they reduced some of the car prices by 20%. Is it going to hit your margins? So CFO says many of the cars were already sold at a lower price point. Okay, so they shouldn't see a big hit on profitability margin. Optimism from Investor Day, because in Investor Day, Elon won't come and talk about something new, so people are generally optimistic. Is it because the Tesla is now finding new income streams? The energy storage business is now becoming meaningful for them. Could that be a reason why there is so much optimism around Tesla shares? That is up 70%. All that is, maybe. I mean, you can never pinpoint on what was the particular thing that caused such a huge jump. Right? I can't pinpoint why is Mercado Libre up like 50%. But there could be other reasons also. Right? Are we looking at something of a gamma squeeze that we have seen in 2021? Right? Maybe. So if you look at some of the stats from CBOE, come on. All righty. So that's a stat for 27th. XPX, XPS, XPX, XPS, XPX, SPX, XPX, VIX, again ETS. Tesla Tesla had the highest volume of short-term dated option, call options, when it comes to individual stocks, almost 3 million call options were traded in the last few days. Are we witnessing the same kind of a gamma squeeze that we had seen in 2021, wherein a lot of out of the money call options were being bought and could be bought by anyone, right? Tesla is a loved stock among retail investors. And so if you look at near-term options expiring, let's say 17th Feb. Okay, now it's not loading the data. Okay. So toss, I don't know if it's in a maintenance mode. But if you look at like 20, there's some numbers, 32,000 contracts. I think I actually downloaded the data. Hold on. Hold on. Oh, yes. Some of the option contract data on Teslas, right? 32,000, 21,000, right? These are expiring 27th. They expired on 27th. So like 0 DTE options being traded. 10,000, 11,000 options being traded. Could this be one of the reasons why we saw Tesla jumping 10% on one day, another 7-8% on day two? Where did it close? How high was it on Friday? All right, is my internet down? Are you guys still able to hear me? But I was asking, are you guys still able to hear me? And then internet conked off. So obviously you were not able to hear me. Okay, now is it okay? Let me turn off the camera. Is it better? In any case, I think we... All right, guys, looks like I have to give up. My internet connection has been, it already conked twice. So I don't know what has happened. But anyway, we are close to the end. The only other company was, I think, ASML. We can review it later. Keep talking, T0 respond. I don't know. Yeah, Zoom disconnected twice for me. So I think let's end it here. Not sure if you're even able to hear me or not. Page is still loading, so I think something funky with my internet connection. All right, I don't know audio is even going or not. All right, guys, you all have a good week. Let's stop right here. Comcast. I'm not going to buy Comcast shares. All right. Thanks, everyone.